What if I told you one man turned Tesla's chaos into a fortune so big, he became the largest shareholder after Elon Musk? Welcome to Elite Trade Club. Tesla isn't just a stock, it's a battlefield. For some, it's the future of cars, energy, and AI. For others, it's a nightmare that can skyrocket one day and destroy portfolios the next. Most investors buy a few shares and hope. But Leo KoGuan, the man they call the Tesla King, played it differently. When Tesla crashed more than 70%, he didn't run. He didn't flinch when everyone screamed bubble. Instead, he doubled down, using tools most investors barely understand. He didn't just invest in Tesla, he built a machine around it. And today, I'm taking you inside his playbook, conviction, leverage, and recycling capital, the 3 moves that turned him into a legend. By the end, you'll see why his strategy isn't just about Tesla, but about building wealth in ways most people would never dare. Before I explain his methods, let me paint you a picture of who Leo KoGuan is. KoGuan isn't some day trader glued to charts, sweating over candlesticks. He's the co-founder of SHI International, a giant IT company worth billions. His wealth was built through business and discipline, not by gambling in the markets. But when he discovered Tesla, something changed. He saw more than just a car company. He saw a revolution. As of late 2023, KoGuan held over 27 million Tesla shares, worth about $5.5 billion. That made him Tesla's biggest individual shareholder after Elon Musk. Think about that for a second. One man holding more Tesla than almost anyone else on Earth. But here's what I admire. KoGuan doesn't hide behind fancy financial jargon. He's open about why he invests in Tesla. He calls himself a fanboy investor. He believes Tesla isn't just about electric cars. It's about the future of energy, transportation, and artificial intelligence. And because he sees that big picture, he can stomach the kind of volatility that makes most traders quit. When Tesla plunged in 2022 and early 2023, a lot of people gave up. They said the story was over. But KoGuan saw that crash as a gift. While others were selling, he was buying. And that brings me to the first pillar of his strategy. KoGuan's approach to Tesla rests on 3 key pillars: conviction, leverage, and recycling capital. Let me walk you through each one. Pillar 1. The foundation of KoGuan's strategy is belief. And I don't mean casual belief. I mean unshakable conviction. He doesn't view Tesla as just another car stock. He sees it as a bundle of bets on the future. Electric vehicles replacing gas cars, solar energy and battery storage changing how we power our homes and cities, artificial intelligence making cars drive themselves, and maybe even robots working alongside humans. Because he sees Tesla as more than a company, he can hold through insane volatility. When Tesla dropped more than 70%, KoGuan didn't fold. He understood that volatility is the cost of owning a company that can reshape the world. In fact, he used that drop to buy more. I find this inspiring because most of us panic when our stocks fall. But KoGuan reminds me that if you truly believe in a company, the downturns are opportunities, not disasters. His conviction is the backbone of everything he does. Pillar 2. Now, this is where KoGuan separates himself from the crowd. He doesn't just hold Tesla stock. He uses leap options to amplify his position. If you don't know, leaps are long-term options that last a year or more. Most traders play around with short-term calls that expire in a few weeks, hoping for quick wins. But KoGuan goes long. He buys deep-in-the-money leap calls. Why does that matter? Because deep-in-the-money leaps move almost like the stock itself. They have a high delta, which means their value rises almost dollar for dollar with the share price. At the same time, they carry intrinsic value, so they don't evaporate overnight from time decay. By using leaps, KoGuan can control more Tesla shares for less upfront money. That's leverage, but it's smart leverage. He's not gambling on cheap, out-of-the-money options. He's buying positions that behave like the stock with less risk of total loss. And here's something I find fascinating. He doesn't just buy leaps and forget about them. He rolls them forward, extending their expiration dates to keep his exposure alive for the long term. It's like he's building a bridge into the future, staying invested without cashing out. This is where his strategy gets bold. He's willing to amplify his conviction with leverage, but he does it in a way that aligns with his long-term vision. It's risky, yes, but it's calculated. The third pillar is where KoGuan turns Tesla into a money-making machine. He sells covered calls on his huge Tesla position. Here's how it works. If you own Tesla shares, you can sell call options at a higher strike price. In return, you collect premiums, cash that goes straight into your account. If the stock never reaches that strike, you keep both the shares and the premium. Now, imagine doing this on millions of shares. The cash flow is massive, and KoGuan doesn't just let it sit. He uses that income to buy even more Tesla stock and to fund more leaps. It's like creating a flywheel. Tesla shares generate income through covered calls. That income buys more Tesla and funds leaps. Those leaps give him more exposure. The cycle repeats. Of course, there is a risk. If Tesla's price surges past the strike price, he might have to sell some shares at a lower than market value. But for someone like KoGuan, that's not a disaster. He's already made a profit, and he can use the cash to rebuild his position. This recycling approach is brilliant. It's not about guessing short-term moves. It's about turning his long-term position into a self-funding system. When I look at KoGuan's strategy, a few lessons stand out. Lessons I try to apply to my own portfolio. First, build your thesis before you buy. If you don't know why you own a stock, you'll panic the first time it drops. KoGuan knows exactly why he owns Tesla, and that's why he can hold through brutal downturns. Second, think in decades, not days. KoGuan isn't worried about Tesla's price next week. He's thinking about 2030, 2040, and beyond. That's how his true wealth compounds. Third, use leverage wisely. Leaps can supercharge returns, but they can also magnify losses. If you don't fully understand them, they can wreck you. For me, the lesson isn't to copy him, it's to respect the power of leverage. Fourth, use options as tools, not toys. KoGuan doesn't gamble with options. He uses them to enhance his strategy. Covered calls bring him cash flow. Leaps give him long-term exposure. Everything has a purpose. And finally, don't blindly copy billionaires. I can't afford to lose billions like KoGuan can. But I can learn from his principles, conviction, patience, and smart use of tools and apply them at my level. Leo KoGuan's Tesla strategy isn't about luck. It's about conviction, leverage, and recycling capital in a way that most traders never even think about. He held through storms, amplified his belief with leaps, and built a machine out of covered calls. When I study his moves, I'm reminded that trading isn't just about numbers. It's about mindset. It's about knowing why you own something, having the guts to hold it, and using every tool available to make the position work for you. So let me throw this back to you. What's your Tesla strategy? Are you a long-term holder like KoGuan, a short-term swing trader, or are you experimenting with options? I'd love to hear your thoughts in the comments. And if you enjoyed this video, hit that like button, subscribe to Elite Trade Club, and ring the notification bell so you don't miss my next breakdown. Until next time, remember this. In the markets, conviction and discipline are the difference between survival and failure. Trade smart, stay sharp, and I'll see you in the next one.